suggest we get going. Welcome all to this final webinar of Solactive's second ESG series on ESG insights. The very interesting topic we have today is real estate and sustainability. Just a few facts that I gathered in doing research for this webinar. The construction industry as a whole accounts for 40% of all greenhouse gas emissions worldwide, a staggering percentage if you think about it. The second fact, which I think is absolutely extraordinary, is if you look at the stock of construction that is still to be built between now and 2050, we're talking about 80% of it. So 80% of the stock of construction worldwide that will exist by the year 2050 is still to be built. You put these two stats together and you realize that this is a very important topic. And I'm only here talking about greenhouse gas. There are other dimensions to sustainability where real estate is absolutely relevant. I'm delighted to have today three great speakers who will provide their own perspectives on the intersection of sustainability and real estate. Bruno Farber is the chairman and founder of Jinko Advisor, a real estate impact investment firm. Walter Chung is the CEO Asia of Storm Harbor Securities and also the chairman of Carbon Care Asia. Hannah Hemke is the CEO and co-founder of Right Based on Science, a climate metrics and software firm. Three very different vantage points, but a common intersection around real estate and sustainability. So without further ado, maybe I can pass it on to one of you. Bruno, you are a practitioner, you build real estate. Can you explain a bit to us? What does Jinko Advisor do? What are the challenges you face, the solutions you provide? Give us your perspective on sustainability and real estate.
Sure, thank you very much, Roger-Marc. So my name is Bruno Farber and I'm the founding partner of Jinko. Now, what does Jinko do? Jinko is actually a set of investment funds focusing on a very niche strategy. We acquire contaminated sites, industrial sites, basically in urban areas in Europe. And with the objective of depolluting these sites, obtaining planning permission, and redeveloping these sites into large mixed-use projects. So to summarize, Jinko is basically a niche real estate strategy that is involved in brownfield regeneration in Europe. We currently have 400 million euros in capital commitment mainly from institutional investors. And we have a 10-year track record. We've been at it for the past 10 years. And we're seen as an impact fund. What is really an impact fund? That is, we make investments with the intention to generate non-financial impacts in the social or environmental area alongside our financial performance. So that's, the intentionality here is very important. And more on that later, but we use 7 key performance indicators that are non-financial to basically measure those impacts. And if I may, Roger-Marc, I'd like to sort of give you my perspective on how I see impact investing, and in particular, impact investing in the real estate sector. Impact investing is still in its infancy, basically, as a whole, even more so in real estate. Most of the impact strategies out there are thematic investing, and we're all aware of, for example, of renewable energy as a typical, impact strategy. Now, impact strategy impact investing is a bit like ESG investing 10 years ago. It's sort of newer. In real estate, slowly, there is a sort of real estate investing universe that is starting to emerge in the impact investing world. And basically, you have three strategies that I've seen. The first strategy is a greening strategy. So what is a greening strategy? It's about basically buying buildings, mostly commercial buildings, and retrofitting those buildings to gain more energy efficiency. That's one. The second impact real estate strategy is obviously social infrastructure. There's an enormous lack for social infrastructure, and the private sector is now involved. Homeless center, nursing homes, and so on and so forth. And then the third big family that I'm involved in is urban regeneration. That's sort of also seen as an impact strategy in the real estate world. It's about, rebuilding the city upon itself, basically avoiding urban sprawl, basically using land plots that are already in the cities and tackle, all kind of issues, but sort of rebuilding the city upon itself. A few words maybe, Roger-Marc, on what I see as the main challenges in the impact real estate world. One of the key challenges is the lack of agreement on how impact should be defined and what the appropriate measures should be. There's a lack of consistency in the measures that are being used in the impact world and specifically in real estate. And I personally don't believe in a one-size-fits-all framework, okay? At Jinko, we've developed custom-made key performance indicators, basically to measure our impact, and that relate exactly to our activity. So that's the choice we took, and our investors are happy with that. Less convinced on the one size fits all. And all the impact washing measures, such as being a member of the Principle for Responsible Investing, all that, that is marketing. Investors are willing to get very precise, robust measures that can be measured by a third party and on which the financial, I would say, performance for the team is linked. So if you hit your measures, your impact measures, you're basically going to get more money at the end in the form of carried interest. So very important aspect. Second key challenge that I see, Roger-Marc, is we're still dealing with small fund size. We're still dealing with limited track records, and we're still dealing with a lot of new managers. So it's really an emerging world, but it's very difficult for institutional investors to jump into one of those strategies because those are new managers with small funds and limited track record. So tricky business. And the third challenge is that a number of investors today still see impact investing as meaning that you sacrifice performance, financial performance, to get more impact. Whereas we believe that you should basically look for market financial performance while having important impacts also. If you have sub-market performance because you're in impact, you're not going to be able to raise capital, and the whole area is going to become problematic. So that's basically what I see as the key challenges, and that's sort of impact investing in a nutshell in 2 minutes.
Very interesting, very interesting. I really like your point on the not one size fits all and KPIs. I'd like to maybe hand over to Hannah, because Hannah, I think your perspective is recognizing the differences across industries, also trying to effectively bring, at least in one dimension, a normalizing number that effectively talks about normalized impact. Could you share your perspective? What does drive based on science do, and then zoom on the intersection with real estate?
Yes, thank you very much for having me in this webinar here. I'm really happy to contribute to the discussion. So Right Based on Science is a young company from Frankfurt in Germany. We were founded in 2016, and we are active in the field of temperature alignment. So calculating the climate impact of a single economic entity and then expressing it in a tangible degree Celsius figure. So we calculate for example, a company or a financial portfolio, okay, if everybody would be like this company, by how many degrees would the world warm by 2050? And that output can be easily compared then to the Paris Climate Agreement, so that we understand if a company under a certain scenario, it's a forward-looking metric, is compatible with the Paris Climate Agreement. And I think the special thing about our temperature alignment metric is that we integrate the financial perspective with the ecological perspective. So a Paris-aligned company which has a degree Celsius below the 2-degree target is a company which has sufficiently decoupled emissions from its gross value added. So it has achieved to remain economically successful, but thereby emitting only as much as it may in order to contribute to keeping the budget for limiting global warming to well below 2 degrees. So the integration of the financial dimension and the ecological dimension, the decoupling of emissions and economic development is something which is really unique to our metric, because I completely agree to Bruno. The connection to the financial materiality is decisive to use those metrics for larger decision making. So we're building the so-called X-degree compatibility model, which is calculating those temperature alignment metrics. And we've been doing this since 2016, mainly for companies and financial portfolios, until our clients approached us asking, can you do this also for a real estate object? It would be really nice to attach this degree Celsius figure to a single real estate object or also a portfolio of real estate objects. And then we embarked on a project with the largest housing company here in Germany and a consultancy which is called Define, very good at data infrastructure and very technical things. And now we're building a software which can calculate the temperature alignment of a single building and a portfolio of buildings. The challenges that we are facing here is mainly, what is a Paris-aligned renovation plan, for example? So how can I really reduce the emissions in the existing building stock to make a housing portfolio Paris-aligned, 1.5 degree aligned? And we see that the decarbonization must be really, really, really ambitious. So it must be really intense. And then, of course, the question comes up, how can we finance all of this? How can we make this possible? And then we understand that the measures to reduce the emissions as much as the 1.5 degree aligned pathway is telling us those measures don't really exist today. Therefore, also the question is, of course, what kind of KPIs would support the portfolio managers to initiate and to start those very costly modernization measures in order to transition their portfolios to 1.5 degree alignment. And how can we adjust financial frameworks in order to support that heavy decarbonization? So that that is one of the largest challenges that we face in the project. The CO2 price does not have the steering effect which would be necessary. This is why we're currently speaking about, okay, how can we determine the cost that would come up if we wanted to modernize a building to be 1.5 degree aligned? And does that cost have something to do with the asset value? Which means if I'm not modernizing, the asset value would decline, which would then be a strong incentive for investors and owners of buildings to take action and to initiate those modernization activities. So these are just some of the challenges that we are facing in our project when we work with the practitioners on measuring the temperature alignment of real estate and also finding pathways and measures to reduce it into the direction of 1.5 degree.
And Hannah, if I may ask you a question here, that applies to the modernization of a stock of existing buildings to reduce their carbon footprint. Does the work you're doing with your partners and for your clients also include the new build world, right? So effectively this 80% that is still out there that needs to be built between now and 2050?
Yeah, so currently construction is not covered by our project because we work very closely with our software development partners who have existing stock in Germany. So for them, it's all about making this existing stock Paris aligned. However, if there is new partners coming into the project who say, well, our pain point is to build or is to construct new buildings in especially developing market where this increase of building is to be expected, then of course this would also be covered by the project. But we started in November to apply our XDC model, our temperature alignment methodology to the real estate sector, and this is the start. Further aspects that need to be covered are embodied carbon. So currently we're just covering the emissions that occur during the operational phase of the building. But of course, we also have to integrate the embodied carbon. Also, when we identify Paris-aligned modernization measures, we have to include the emissions that occur when those measures are actually being built. So when we create new material, for example, all of this is not yet developed enough and sufficiently in order to have valid benchmarks, in order to have a scientific consensus. So this is a very dynamic field, which is of course very challenging, but also something where we see how much collaboration and how much the integration of the scientific perspective also helps to pave the road towards a very robust measurement framework.
Very interesting. And the last question, maybe for our audience, we're talking about 1.5 degrees by 2050. If you look at the stock of real estate assets that you and your company are working on finding a new trajectory today, according to your model, is there a percentage existing stock? Is it 2? Is it 2.5? What's the size of the effectively greening, the greening gap that needs to exist this existing stock of assets? Is there a measure that you have already a sense for?
Unfortunately, I can't give a concrete answer here. We're still in the development and the adjustment of the XDC model. Right. The housing portfolio that we have with Vonovia is representative for Germany. So I think the results will be very interesting here. But what can be seen already is that the decarbonization and the modernization rate is really, really sophisticated. And the question is really if the real estate sector is aware of this ambition, which is in line with the 1.5 degree target until the end of the century.
Very interesting. And you are at the forefront of this field. So clearly your perspectives on this are very, very interesting. Extraordinary to see that there is still such a understanding gap in impact effectively.
Yep. So and if I may add that, that's exactly the difference between carbon neutrality and 1.5 degree alignment. So carbon neutrality is that point in time where we reach zero. And the Paris alignment is the budget thinking. So what is my pathway towards net zero? How much do I need to reduce in order to emit only as much as fits into the 1.5-degree budget? So we need to think about this timeline, and we need to think in budgets and make sure that we keep that budget until the point where we reach net zero. And that makes it, of course, very complicated to come up with metrics and measures. But that's what we really need to do now in order to have certainty.
Very, very interesting. Walter, maybe I can turn over to you. You're calling us from, I believe, Hong Kong, despite.
Yes, indeed. Yeah.
Give us your perspective as a practitioner. Tell us some of the work that you are conducting.
Okay, maybe I spend a few minutes on the background of CCA and myself, but more importantly, to talk about the peculiarities of properties or real estate as an asset in this part of the world. CCA has been a pioneer ESG consultant, has been around for more than a decade, long before ESG become popular. In this part of the world, we are the first one pioneer carbon trading, but it ended up going not much that far. We are also in the green. I joined CCA about 5 years ago, basically pioneering the green finance initiative. We are the first institution to be awarded by CPI as a verifier. My background is like many of you, in finance. I was an investment banker for more than 20 plus years. So CCA has always been trying to bring Asia risk to the European investors. And about a year plus ago, we worked with Solactive in launching a couple of finance indices. One of them is actually the Asia Pacific Green REITs Index. I believe this is first of its kind, and also reflect the importance of real estate asset in this part of the world. Talking about properties, I mean, if I can cite an example, when Donald Trump or Biden worry about the economy, he will talk about the stock market. But when Xi Jinping worry about the economy, he will talk about real estate. Real estate, I mean, in the West, I think as a household asset, stock market or financial security definitely rank #1. But in this part of the world, real estate rank by far the most significant asset in a household's balance sheet. So that's something to be recognized for. And in Asia, we have a few cities that actually for a long time occupy the most expensive city in the world from a property point of view. I think actually that create more opportunity than a challenge, because I think because the property are so expensive here, the developer particularly on the commercial property side, are very willing to invest on the green technology or bring in method to reduce the carbon footprint. Because as a cost expressed as a percentage or a basis point of the value of the property, this is very modest. So I think the willingness to spend on this is there, and that shall create more opportunity for us, and that's why we're so keen on bringing on board these green REITs in indices. Yeah.
Well, today you're turning to the role really of the capital providers here, which I think is interesting. What's your observation? Are asset owners, investment managers, from your vantage point, allocating accordingly, interested in these concepts? Do they effectively affect the trade-off of that Bruno was referring to, sort of this impact as a trade-off versus risk return? Yeah. Or do they integrate it because it's, they think it's good practice? What's your observation of what you see from the investment community?
Yeah, I think the most, and if you divide the property sector into different segments, the residential, the commercial, the industrial, including the logistics warehouse, the one that is moving fastest is actually the commercial. We got a lot of so-called premium label in commercial building in the major city in Asia. I think, but if you look at the proportion of the different stocks or different types of property, residential is still carry more than half. I would say probably 70% of the value of a property stocks in this part of the world, and yet I think on the residential side the movement is quite slow, and I think that's we maybe require some stronger legislation effort from the government to move that needles. The commercial side, as I mentioned, because they are facing, a lot of them are facing international tenants, so producing a green building make a lot of commercial sense. But I think that hasn't been reflected in the residential sector, which I think also linked to the awareness of the general public. And this part, CCA has been doing a lot of educations, a lot of seminars to promote that. Yeah.
Very interesting. I think there's a common theme here that we effectively touching on, which has been the case for climate, but I think it's in fact central to any of the SDGs, which is the concept of externalities. And I remember as a student of economics, when you have externalities, there needs to be responses of putting back the externality either in the price or forcing the clearing mechanism to be different, because taxes, quotas, regulations are imposed to effectively bring that externality back into the clearing mechanism. I'd like maybe to turn with that in mind, seeing the number of frameworks, the number of forces trying to bring these externalities back in the pricing function, to ask you all, Bruno, maybe starting with you, what you see from a regulatory top-down, forcing mechanism, so to speak, that is material to your industry. There's a lot of initiatives going on, for instance, SFDR, TCFD, you name it, all sorts of different things. What matters for you today? And maybe we can turn around and talk about that, right? What's the role of regulators? What are the forcing mechanisms that work and those that you think don't work?
Yes, thank you, Roger-Marc. Well, you mentioned the Sustainable Finance Disclosure Regulation, SFDR. The SFDR, this is a new regulation that is taking place in the European Union. And it has a significant impact on the investment industry in general, and but in particular in our field. What happens is that, and I'll spare you the details because it's extremely complicated, but how sustainable you are, you end up being what is called an Article 6, an Article 8, or an Article 9. And Article 6 is you basically measure, how sustainable your investments are. Article 9 at the very end, you're a deep green investor, and not only you measure those your sustainability, but you basically provide specific KPIs that are intentional, measurable, and that you try to reach, and you become some kind of a impact fund in a certain way. My belief, Roger-Marc, is that investors in Europe more and more will look whether you're Article 6, 8, or 9. And if you're 9, you're going to have an easier time, especially if there are some green bonds that are involved at a later stage. A number of our investors in Jinko basically issue green bonds, okay? And we are part of that underlying asset for the green bond. It's been the case in the past, and there was no SFDR to speak of. Now SFDR is only going to accept Article 9 vehicles to issue green bonds. I'm sure of that. So that's one impact of the regulation. The other one is obviously the national regulations regarding to energy efficiency on a country per country basis. And that's a fast moving target, especially for housing, but also for offices, commercial real estate. Today, for example, I'll give you a practical example. In France, there's a regulation for housing that is called RT 2012. It's going to change next year with something even more ambitious, basically, that is going to basically push every real estate developer in the back to reach a very high level of energy efficiency that is just the national norm. So just reaching the national norm in France is already going to be quite a challenge for a number of builders, I can tell you. Now, some countries, especially in the south of Europe, may be a little bit less advanced than France, that is trying to make an example of it. But the regulation in terms of energy efficiency in buildings in Europe is very strong and moving very fast. And maybe Anna, you're more aware of the details on that, but that's the key pressure for energy efficiency in the construction area in Europe.
Yes, I can definitely agree to what you said. So especially in Germany, we recently had this very interesting case, that court case, that said that the climate protection law in Germany was partially invalid. So the government has to put tighter targets and more ambitious targets into its own law. And the real estate sector will play a large role here. So that was just a very recent signal that that the 1.5 degree compatibility is something that will not go away as a requirement for the real estate sector to develop. The big question that we have in the collaboration with our clients is, okay, what happens if I don't meet those efficiency standards? What are the concrete transition risks that result from not meeting those efficiency standards? Am I not allowed anymore to rent my houses? Do I have to pay a fine? How high is the fine? So that is the information that is still required in order to really link emission intensities or temperature to the financial materiality, and thereby creating KPIs or creating information that really incentivize the modernization and the action that is really needed to reach 1.5 degrees. So that would be the next step for me to be excited about. Once we have that concrete, it's much more easily to create the KPIs that really mobilize.
Very interesting. And obviously the fine, you can think of many different ways to economically price that fine, but it has to do with the delta of impact that the building would have if it followed the measures versus if it didn't follow the measures. So much has been said about CO2 price and emission allowances and CO2 pricing in general, with models now in Europe quite mature, California likewise, many countries looking at it, including I think in China. Does, Hannah, from your perspective, is the price of CO2 right? Do the CO2 pricing or allowance, effectively quota-based mechanism, work? Are they having an impact? Is it material yet, or is it red tape and just puts costs up and then the cost gets transmitted to the end users and no impact?
So currently there is still a lot of confusion and open questions with regards to the CO2 price, because we have the EU regulation for the CO2 price, then we have a Germany specific regulation with the CO2 price. They refer to different sources of emissions. So there is still a lot of things to be clarified. And with the price level currently does not have a steering effect when it comes to the decarbonization of real estate objects. There are a lot of studies that show that the necessary steering effect is not achieved, not on the side of the people living in the flats, nor on the side of the people owning the flat, and it's not very clear who actually pays that price. And there must be a difference between the CO2 price that relates to the heating and the CO2 price that relates to the electricity which is consumed in the house. So the questions which are still open that would need to be answered in order to understand whether it has a steering effect, yes or no, are still very large. Of course, one can create models saying, okay, if eventually it will turn out like this and this would be the effect that we had on the owner side. If it turned out like this and this would be the effect that we had on the tenant side. But I think one thing is clear, that with the current levels, we are not incentivizing the modernization rate, which would be compliant with the 1.5 degrees Celsius scenario. So here we still have to think about other measures.
And there's a consensus around that. Right? People would say, yes, you are right. It's not debated too much that it's probably not having the impact that it should have.
Just to share a data point, I mean, CCA is working with Australian partner that is actually doing some reforestation on the land. So we get rid of the cattle and then we will plant the tree. And all this economic is actually anchored on the carbon credit market promoted by the Australian government. So going back to your point, Roger-Marc, about externality, it is important. But if you're going back to the real estate side, that the government have been let's say in Hong Kong has been quite slow moving in that aspect. The latest legislation is regarding e-vehicle, but I haven't seen anything really aggressive for the property sectors.
Walter, I mean, you are in a part of the region where obviously China is dominant. It's dominant worldwide. We're talking about clearing mechanism here, and China has historically had a very centrally managed model, which has had considerable success in the last 25 years. Could you share your perspective on how effectively is there like an enlightened view at the center that is effectively the forcing mechanism? Or what's happening there overall?
Yes, maybe I take a snapshot of now. I don't know who remember when was the last time the face of Xi Jinping has been put together with the face of Biden. It hasn't been there happened for a long while, except a couple of weeks ago. During a climate summit in Washington. Both of them are on the video conference, and the media capture a shot of both head of states being together. And again, I throw in his historical perspective. For those who've been around long enough, remember 50 years ago, the restarting of a Sino-China relationship is actually done by the ping pong table tennis. Table tennis was the instigator of the American diplomacy in connecting with China. So bringing back to today, I think climate is one of the very few bridges that still connected the U.S. with China today. I think Xi Jinping's commitment on improving the climate quality in China is firm and clear. From an execution point of view, there's a lot of hurdle, some inherent burden because of the system that they have. Lack of transparency is one of them. A very much, almost too much a top-down system is another one. But the commitment is very firm. And I think I talked to a lot of senior officials in Beijing, and although I live in Hong Kong, which I take a different political stance from Beijing, but the mentality in Beijing had changed from last time. It was, the developed country has enjoyed the goodie and now they doesn't leave anything for us. Moving from that mindset into the climate, the water quality, the air quality in Beijing is too bad. okay, we must do something about it. It's not about fairness. It's about necessity. So I think that's a big improvement. And if you look at some of the result of this top-down measure, China, from nowhere in the green bond issuance in 2016, it jumped into number 2. It issued almost half of the world's green bonds. And fair enough, there's enough share of greenwashing, but still it showed that the commitment of the government is strong. I wish there are more transparency. I wish there are more communication. And I think this is one of the few things that the Chinese is very willing to connect it to a Western standard. So I think, as I say, when was the last time you saw Biden face to face with Xi Jinping? It is only on climate summit. So on that note, I'm optimistic. Yeah.
Quite encouraging what you say. We will have some Q&A in a short while, but wrapping up, or maybe thinking about the future, if I could ask each of you to think through, what should we be watching over the next 5 years? Is there something that really keeps you awake, or if not keeps you awake, you think is really interesting, has potential, either innovation, regulatory initiative, the provision of more data, attitudinal shifts? What do you think, connecting real estate and sustainability are maybe things we should be looking forward to or hopeful for over the next few years? Maybe we can start on the Hannah, if you have some views on that, the trends that you think are going to be positive, that you're hoping for, as almost a wrap up on this topic.
Yeah. So what I'm observing currently is that we very wildly talk about emission reduction measures. There is no direction, there is no structure in that conversation. And I think if we understand more about what is actually 1.5 degree compatibility, how does it integrate the reduction of emissions over time until we reach net zero, we have that framework to understand what is a Paris-aligned reduction measure and what is not a Paris-aligned reduction measure. So I believe if we do our homework on the budget thinking, on the 1.5 degree compatibility, we will be so much faster identifying the kind of measures that really get us there. I believe currently we speak about a lot of measures that bring us from 3 to 2.5 degrees, but we want to find the measures that bring us from 3 to 1.5 degrees. And by building that framework, we can eventually identify them and then communicate this to the industry, what needs to be created, what solutions need to be there in order for the real estate sector to develop into the future. And the gatekeeper here is the clarity about the 1.5 degree compatible data framework and measurement framework. So that is something that I'm most excited about.
So also the topic of transparency, effectively, that Walter just alluded to, coming from a very different angle, right? The normalizing, we know what we're up for. Bruno, from your standpoint, I know the core purpose is regeneration. You mentioned urban sprawl, land decontamination, clearly very worthwhile objectives. But overall, what should we, where's the innovation going to come from? You talked about the impact investing side, Article 9, different views of investors, different needs of investors. Is there more innovation that you think will also happen from within the construction or the real estate development sector? Do you observe change? You've been in the industry for a long time. Is it the reg that's changing things, or is there genuine material innovation? I'm just thinking, back to this 80%. We need steel, we need cement, we need glass. We will continue to need them. So we presumably have a need to find better ways to produce things and to mix them, to assemble them.
Well, to tell you the truth, Roger-Marc, and talking from a European perspective, I'm actually not very impressed with the level of knowledge in terms of energy efficiency in building in the construction sector I've met a lot of construction representatives. I've met a lot of architects and urbanists, and I'm not very impressed with the overall level. Now, happily, there are a number of very specialized consultancies that sort of, get in the group and provide more clarity. What I believe is that left to themselves, the construction industry is not going to be a driving force. What I think is that it's regulatory pressure that is going to force them to rethink their model. So in my mind, it's only through regulatory pressure. That being said, I agree with Anna in the sense that if you want to leverage on the private sector and the private money in particular, you need to provide investors with clear methodologies, clear frameworks, transparent KPIs that make sense. And that is going to help leverage investment in the field. Otherwise, investors don't like to invest in black boxes. They want to fairly understand what they're doing and how they contribute to a positive future.
Very interesting. Walter, from your side, you've already started to talk about it. What should we be looking forward to or hoping for?
I have to admit, Asia is still behind Europe in that aspect. What I hope to see in the next while is more quantifiable tools like carbon pricing. And a lot of these initiatives need to come from the government. And I hope we can learn, but I hope we can also move faster than what we are now. Yeah.
Interesting. So we all agree here that the role of policymakers, policy setting, frameworks coming top down effectively and binding actors in the system is a complete necessary precondition for solving this issue. So it's great we're all on the same page. When we look at the time it took to get Paris signed and re-signed or rejoined, it is maybe something to be concerned about. I'd like to turn it out to the audience. If anyone wishes to put Q questions, no answers. We will leave the answers to our panelists or tentative answers. Please include them in your question and answers, in the Q&A button. I'd like to ask certainly one question directly off the bat. Bruno, you mentioned 7 KPIs on your side. We talked about metrics quite a bit. Rapid fire, what are the 7 KPIs you use? Can you apply them to all your portfolios or all your assets?
Well, I'm not going to bore you with the 7 KPIs in details, but the whole idea is that investors want to have transparent, relevant, and robust indicators of the non-financial impacts. And those measures need to be easily aggregated across projects to have a portfolio view. That's also very important. And they need to be understandable by non-specialists. That's the black box syndrome I was referring to earlier on. You wouldn't believe how important it is for investors to understand the KPIs. If you just bring them a black box KPI, it's going to be a very difficult sell. So, and of course, the last aspect, it needs that these KPIs needs to be verifiable by third-party experts. If you're the own judge of your impact, it doesn't fly. Obviously, there's a conflict of interest. So I'll just give you the names of the KPIs that we use, just to give you a rough idea. The first KPI is soil artificialization reduction. By rebuilding the city, basically, we avoid urban sprawl, we avoid green land, natural land to be consumed by real estate. That's measured in hectares. We have an objective to save 300 hectares in Europe by rebuilding the city upon itself. The second measure is basically depollution. we spend a lot of time, energy depolluting those sites. And so we monetize the amount and we tell our investors, our objective is to spend at least 60 million euros in depollution, environmental liability management. You know, it's an interesting measure. It means we're not bullshitting our way. We're really very active in depollution. The third one is called positive biodiversity. I'll spare you the details, is how much biodiversity you're able to create on a given project yourself. You know, parks, green areas, trees, green roofs, and so on and so forth. The fourth one is circular economy. How good are you at reusing waste on a construction site? You know, there's waste that you can reuse to a large extent and avoid putting everything in a truck to a landfill with a terrible carbon footprint. The fifth one is energy sobriety. That's basically the discussion we've had a couple of minutes earlier. It's basically the national regulation, and we try to do a little better than that. So we basically have objectives around 15 to 20% better than the current national legislation, okay? The sixth one is a very curious one, interesting one. It's called climate resilience. We basically provide our investors with the amount of money we've invested in green or gray infrastructure to prevent extreme climatic events, you know, floods, heat waves, and so on. So if you want your real estate asset to survive in the long term, you have to basically build climate resilience infrastructure. And we basically tell our investors, you know, what we do in that regard. And the last one is community engagement. You get nowhere in developing anything if you don't talk to all the shareholders, including the residents, the politics, you know, everyone. And so we basically provide measures to our investors in terms of how active we are in community engagement.
Very interesting. Hannah, if I could ask you, I mean, these are very detailed output metrics effectively on the impact cycle. If you had one wish for more data coming from the objects or the enterprises or the securities, what's missing that you think, what's the missing link, if any, in you establishing your degree compatibility model? What do you wish was more out there that could make your life easier?
So I think it's definitely the energy demand, cooling and electricity. So that is data which is very hard to access by investors or banks, not so hard to access by housing companies. But for investors and banks, this is the data which is really hard to get. Yeah, that would be a concrete answer to your question.
The energy input into a commercial entity, is that it?
Also a flat, for example. So the energy demand, and both for electricity and for heat.
And if you think about it, something which is in principle eminently observable, it's not subjective. We know it is a quantity of atoms that are going through electricity lines and provide current. Very interesting.
It should be a standard piece of data. So I think it's just that nobody has ever invested into systems and infrastructure that would provide this data on an automatic level. So I'm pretty sure this data point will be available in the future, because all kinds of regulatory initiatives or market-based initiatives are calling out for it. And now the market is interested in that data point. Now the link to the financial materiality is increasingly being determined. So this is why I'm pretty certain that this data point will be available in the future. It's just a question, okay, is that then too late to start with the decarbonization and the measurement and the management, which is then put on top of this data infrastructure? Or should we start already today by approximating, by really investing into building up that data infrastructure? It's really a matter of time. If we think in the carbon budget, we get aware of how much this is a matter of time, and can we still afford like building this data infrastructure first, then getting active, that might be too late.
Yeah. So again, the sense of urgency around that. And Walter, maybe some last comments on your side. Carbon Care Asia. If the world of carbon care could be made easier, is there something that is missing at demand side or supply side?
I think the awareness of general public is still behind my expectation. So there are things to catch up on the public awareness, and I think that need to be lead or helped by the government initiative. So the government need to take a bolder move to achieve that. Yeah. But I think the external factors are there. More and more people seeing that this is not really an option, but a must. However, whenever come to something that hitting them personally, they drag on. I mean, if I need to pay a price for that one, no one want to pay the price. I mean, everyone agreed this is a key initiative. So I think some kind of legislation pressure will help the situation. Yeah.
Thank you, Walter. I'd like to maybe sum up here. I wrote down 3 main points that came out of this very, very wide tour of horizon. It is such a big topic that there's no way we would have reached obvious conclusions. But one conclusion was, and I think we all agreed, left to its own devices, the real estate sector, the construction industry will not solve its problem of its own. So we all agreed that a need for concerted, urgent action and forcing mechanisms, whether they're centrally planned, consumer-led, regulatory-led, is absolutely essential. The second conclusion, second takeaway for me is the need to look at transparency and see that some data doesn't exist just yet to be able to observe the impact, model the future impact. So that's clearly where, Hannah, your role comes into play, but it's quite extraordinary in the day and age of big data that we are saying for such an important problem, we don't have the data we actually would need. I'm not even talking the models, pure data. You talked about, electrons going through the copper cables. It's astonishing. And the third one, which for me is also very relevant, awareness of the magnitude of the issue, of the urgency of the issue, is not there yet. I think maybe 4 years ago, climate change wouldn't be the central page or central topic in every single newspaper. I was betting at the beginning of 2020 that it would be on the front page of the FT every day, but coronavirus came out. Let's see what's going to come in COP21 later in the year. Let's hope for more, Biden, Xi Jinping meetings and pictures of Zoom meetings between them and concerted action. I'd like to thank you all for your participation. I think it was extremely useful. Again, a very, very complicated debate, but my sense is you brought some really useful perspectives from 3 very interesting vantage points. So thank you all. And I will finish it here.
Thank you very much.
Roger-Marc.
Bye-bye.